Today we're going to be taking a look at Postal Realty Trust, ticker PSTL. This was a stock that was requested over on our Discord channel last week, and it's a pretty interesting company that stands out for a number of reasons. It's an equity real estate investment trust that exclusively focuses on properties that are leased to the United States Postal Service. It's a relatively new company, having been launched back in 2019, and it currently offers a very attractive and growing dividend yield of over 6.5%. So in this video, we're going to examine this REIT and determine if it might be worthy of consideration for a dividend-focused portfolio. With that being said, let's go ahead and get started. Postal Realty Trust describes itself as being the first of its kind and only publicly traded real estate investment trust that's focused on properties leased to the USPS. If you aren't familiar, the US Postal Service doesn't actually own all their post office locations. According to their website, the USPS has roughly 8,500 owned facilities in its inventory, but they maintain more than 25,300 leased properties which are owned by other landlords. So the overwhelming majority, about 75% of all USPS offices, aren't actually owned directly by the Postal Service. They're paying rent just like any other business renting retail, office, or medical properties. When I first came across this, I wasn't even aware of just how many properties the Postal Service doesn't actually own themselves. I've seen post offices in strip malls, so I assumed that all of those were being leased, but 75% in total is a pretty significant amount of their offices. Postal Realty Trust has an all-star management team, having a significant amount of experience in either buying or managing US Postal Service properties or having worked directly for the Postal Service. CEO Andrew Spodek and other members of his team have more than 20 years of experience in investing and managing Postal Service properties exclusively. Also serving as a member of the board is the 73rd Postmaster General of the United States, Patrick Donahoe. Other members of their team have long histories of working within the banking or REIT sectors. As of the making of this video, Postal Realty Trust currently owns 1,332 properties in 49 US states. The Postal Service has 3 different property types that Postal Realty invests in, which are last mile, flex, and industrial properties. Last miles are smaller properties that serve as the last leg of a delivery from a transportation hub to the final destination. Flex properties are larger, typically between 2,500 and 50,000 square feet, that can offer more services than smaller rural post offices. Then finally there's industrial centers, which are more than 50,000 square feet in size, which perform logistical functions and they distribute mail to other USPS locations. Postal Realty Trust portfolio consists of 20.8% last mile offices, 50.3% flex offices, and 28.9% industrial properties. Considering the US Postal Service currently leases out about 25,300 properties, this means that Postal Realty Trust only owns about roughly 5% of all leased USPS locations. This means that there's still a substantial amount of potential growth for this REIT as they attempt to acquire more properties. And having the Postal Service as your only tenant does come with some good benefits. First is their occupancy rating, which is currently 99.7%. Because they own buildings that the Postal Service already occupies, it's not like they're going to try to move into a different location unless they close the entire branch altogether. The second benefit is that Postal Realty collects 100% of their rent from their properties, which sets them apart from practically every other REIT out there. One of the most important things for a REIT is that your rental income is dependable and predictable. Having the Postal Service as your only tenant almost guarantees that this company will always be able to collect what they're owed. In the first quarter of 2023, this REIT's been really active in acquiring more Postal Service locations. In their latest earnings call, they announced that this year, Postal Realty has recently bought 20 last-mile properties and 97,000 square feet from 19 flex properties. Subsequent to quarter end and through April 26th, the company also acquired 7 properties for $4.5 million and placed an additional 12 properties totaling $3.9 million under definitive contracts. And although their stock hasn't been around too long, at least up to this point they've never cut their dividend. From 2019 until this year, they were growing their distributions every single quarter, ranging anywhere from a few cents to a fraction of a cent per share. Just recently in April though, they stopped increasing their dividend every quarter. Right now it's currently yielding 6.61%, which is pretty high for an equity REIT. But overall, this stock's been a pretty good grower since their IPO 3 years ago. You can see how over the last 3 years they've been able to grow their real estate acquisitions, AFFO, and dividends per share. Right now, according to their investor presentation, the dividend is fully covered for this company. This REIT does have a much lower WALT or weighted average lease term compared to other REITs. 3 years isn't typically great, and it's not uncommon to see other real estate investment trusts tout WALTs as being 8 to 10 years on average. But considering this REIT in particular, I actually see this as being a good thing. With only one tenant and they can almost guarantee their rent, and they have a 99% retention rate, and they don't have other options in terms of places to go, it's not a number that I really care too much about for this company. If anything, it probably gives them a better opportunity to negotiate rent higher every 3 years. Now that we've looked at some of the good things about this company, let's now go over some of the concerning issues. I think probably the biggest concern we have has to do with the state of the US Postal Service. This graph shows the number of post offices that exist in the US, and you can see that between 2015 and 2021, the number of post offices keeps decreasing. Every year there's some new announcement regarding post office closures. Back in February of this year, the post office announced that they'd be closing 40 of their locations, which are usually due to underperformance. Over time, the US Postal Service has continued to face several challenges, which include having to compete with both FedEx and UPS for package deliveries. Additionally, some larger online stores like Amazon no longer use the Postal Service and instead have created their own means to delivering packages. What's good for the Postal Service, though, is that they are supported by the US government, and even though some people have been talking about privatizing the Postal Service, it's my opinion that this is very unlikely anytime soon. But as time goes on, the demand for mail keeps decreasing, whereas the demand for packages keeps growing, which is performed by their competitors. The Postal Service has been losing money for many years, largely due to employee compensation. But most of these things have been issues that have existed for decades now, and the USPS is still around and they'll probably be so for a long time. One of the biggest concerns is that one of their properties will become vacated by the USPS. But considering the management team's track record, I'm sure that they perform a lot of due diligence on each property before they attempt to acquire it. Things like office revenue, the population surrounding the office, and nearby FedEx and UPS locations are probably just some of the many things that they look at to make sure the USPS isn't going to just abandon the property. Because once they move out of a location, I couldn't locate what this REIT intends to do with their vacant properties. I'd imagine that there probably aren't any other businesses that'd be interested in it, so they probably try to sell it right away or try to fix it up before getting rid of it. But I think a second thing to consider for Postal Realty Trust is that they only invest in Postal Service properties. This means there's ultimately a limit to the number of buildings that this REIT can own, which translates into there being a limited number of growth they can experience. I'm curious as to what this company's future plans are when they can no longer acquire more postal offices. If you take a look at other REITs like Essex Property Trust, Ventas, or NNN, they invest in such a broad range of different property types, or they're at least still building more types of the properties they acquire. For Postal Realty, though, they're someday going to reach a limit, and I don't know what they intend to do during that situation. To summarize, based upon what we've looked at, I do see good potential for this company to keep growing going forward. Considering that they only own 5% of the market, that means there's still plenty of opportunities for them to keep expanding their real estate portfolio. But I still do question what this company is going to look like in 10 to 20 years. Eventually, they will have to present a game plan on how they'll be able to keep growing, unless the USPS happens to go through a miraculous recovery. For those of you who are interested in PSTL, I'd recommend only allocating a small amount of your overall portfolio to it. But when this company does begin to run out of growth opportunities someday, if they haven't established a good, solid backup plan, there might come a time where you'll need to consider selling it if it gets really bad. I don't think this is the type of stock that you can retire on, like how I believe WP Carey or Realty Income potentially are. But based upon the financials we've looked at, I think there's still good growth to come from this stock. With that being said, that's going to wrap up today's look at Postal Realty Trust. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.